Welcome to the Scholars Learning classes. In this video we will be studying about the accounting treatment of goodwill in the case of retirement or death. Now, the retired or deceased partner is entitled to his share of goodwill at the time of retirement or death, because the goodwill earned by the firm is the result of the efforts of all the existing partners in the past. So the entry that will be passed is gaining to sacrifice, which means who all are gaining? Old partners. So old partners capital account debit to retired partners capital account. Let's suppose his share of goodwill was 20,000 and their gaining ratio is 1:1 of A and B. So it will be debited in A's account, it will be debited as 10,000, and in B's capital account it will be debited as 10,000. So in the gaining ratio, goodwill entry is passed. If there is goodwill already in the balance sheet, in that case old partners capital account debit to goodwill account. You will write off the goodwill value in what ratio? In their old ratio. So first of all you will write off the goodwill value that is present in the balance sheet. P, Q and R are equal partners in a firm. R retires and the goodwill of the firm is valued at 3,60,000. See, goodwill of a firm is 3,60,000. So R's share of goodwill is 1/3 of 3,60,000, because they are equal partners, means 1:1:1. So it is 1,20,000 is the R share of goodwill. Now old ratio is 1:1:1 among P, Q and R. New ratio of P and Q is 3:2. So let's find out the gaining ratio, that is new ratio minus old ratio. 4/15 Q new ratio minus old ratio, that is 1/15. So gaining ratio among P and Q is 4:1. So now we'll pass the entry of goodwill, that is gaining partners, that is P's capital account debit, Q's capital account debit to retiring partner, that is R's capital account. 1,20,000, and this 1,20,000 in the ratio of 4/5, 1/5, 4/5 and 1/5, because of 4:1 gaining ratio, that is 96,000 and 24,000. So this entry will be passed for the goodwill. I hope you like our video. Please download our Scholars Learning app and enjoy the learning experience with us.